Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. Let's take a look at the stories for the day. Its quarterly loss has widened. It is facing scrutiny for a series of mid-air technical snags, and its CFO has quit. India's budget airline SpiceJet is in descent. So what is next for the airline? Let us find out.
A considerable jump in air traffic and moderation in jet fuel prices have failed to turn around the fortunes of SpiceJet, which continue to remain in the red. In January, domestic airlines carried 64 lakh passengers, and the numbers jumped to 6.7 crore in July. During the same period, SpiceJet's domestic market share came down from 10.65% to 8%, which meant the airline slipped from number 2 to number 5 in ranking in a matter of 6 months. The company delayed its Q4 FY22 results after witnessing a ransomware attack on May 25th. SpiceJet on Wednesday reported a Q4 loss of 458 crore rupees and a loss of 789 crore rupees in the April to June period, the first quarter of FY23, due to high fuel prices and a depreciating rupee. The first quarter total revenue more than doubled to 2,478 crore rupees. Meanwhile, the overall loss incurred in FY22 was 1,725 crore rupees, a jump of 73% over FY21. To make matters worse, its chief financial officer Sanjeev Taneja, who took charge in November 2020, resigned with immediate effect on Wednesday. SpiceJet said a replacement has been found. Markets took the cue. The Gurugram-based airline's shares fell as much as 15% on Thursday. So far this year, the stock is down 33%. The cash-strapped airline has been struggling to make timely payments to vendors and lessors, which has led to the aviation regulator DGCA deregistering 6 Boeing 737 aircraft in August. Its employees on Wednesday alleged a delay in the dispersal of salaries for the second straight month, with the airline saying the payments were being made in graded format. In July, DGCA ordered SpiceJet to slash its approved fleet to 50% this summer for 8 weeks in the wake of several mid-air safety snags. The regulator said that it would subject the airline to enhanced surveillance. In a show cause notice, DGCA has said the airline failed to build safe, efficient and reliable air services. As of March 31st, SpiceJet had a negative net worth of 4,288 crore rupees and negative retained earnings or accumulated losses of 5,913 crore rupees. Its current liabilities exceeded its current assets by 6,408 crore rupees. Its cash and cash equivalents at the end of FY22 stood at 9.6 crore rupees, while bank balances were 50.7 crore rupees. Managing Director Ajay Singh said despite the complex operating environment and highest ever input costs, the airline had been able to sustain its operations and would soon engage investment banks to raise up to $200 million or about 1,590 crore rupees. But will this be enough?
Given the way the situation is with SpiceJet, there is no other option but to raise equity. That is the first step. The kind of debt that he has, if any bank has to give any further more credits or debts, they would need an equity infusion to come into place. Number 3, you have to understand that the airline still has aircraft on orders. So when you're looking at the equity infusion, and there are a lot of hedge fund or there are large funds which do look at such kind of opportunity. This is like an opportunistic investment. A significant part of that return on the investment is actually going to come from the future aircraft orders and the sale and lease back. And the capital gains that they get on those aircraft type. I think they would really need to look at $300 million kind of a number. The only value now in SpiceJet is not the slots, not their traffic. The only value left in that airline is the future aircraft that they're supposed to get on the Boeing 737. And for them to lock that value, they need to make the PDP payments on time. So keeping those PDP payments in place, I'm sure that number would be close to about 300 million that they would have to really look at. The airline has deferred a lot of their payments in COVID. So they've not paid their lessors, they've not paid airports, they've not paid maintenance organizations. Yeah. They've deferred all those payments. Now, a lot of these vendors would have been okay as long as the airline was not operating to its full limit. But now, the minute the airline starts operating in full limit, you have to understand that all these companies are waiting to get themselves paid. Your cash inflow still is probably in the same line as what a normal operational cash flow should have been, but your cash outflow is about 80-90% higher.
In short, Ajay Singh needs a white knight. Given SpiceJet's current market capitalization of about 2,700 crore rupees, any fundraising can cause significant dilutions for existing shareholders, including Singh, who holds a 59% stake. But this can be avoided by structuring the infusion such that he retains control after onboarding the financial investors. Unless he can convince new investors that he is the right man again to steer the turnaround, he may not come out unscathed.
SpiceJet was hit by a somewhat similar storm in 2014, and a change in ownership had stirred it out then. After the Indian skies, let us shift our focus to its roads, which are all set to witness a big change in the next few years. This change will stamp out pollution and noise from the traffic. Electric vehicles are set to take India by storm. They are trickling in one by one, and foreign as well as domestic companies have lined up a host of variants. The stage is set for the electric vehicle revolution in India. Our next report tells more.
When Warren Buffett's Berkshire Hathaway invested $232 million into China's BYD, it was a nascent startup that had just started selling electric vehicles. 14 years on, Berkshire's stake is worth $7.5 billion. And BYD has dethroned Tesla as the world's biggest EV maker by sales. Between April and June, BYD shipped 3.54 lakh EV units, an increase of 266% year-on-year, while Tesla's global sales grew 27% to over 2.54 lakh units. It also overtook South Korea's LG Energy as the world's second biggest EV battery manufacturer, behind China's CATL. The Shenzhen-based group is now aggressively pushing into foreign markets, including India, where it is set to unveil its first e-SUV soon, with deliveries beginning in January. The company has been selling its electric MPV E6 to corporate and fleet customers in India since November 2021. Its upcoming model, the Atto 3, will also be assembled at BYD's plant near Chennai, which has an installed capacity of 10,000 units per annum. Tigor and Nexon EV maker Tata Motors held a whopping 85% share of the passenger EV market in FY22. They were followed by China's SAIC-owned British brand MG Motors at 11.5% with its ZS EV. According to the Federation of Automobile Dealers Association, out of the 2.72 million passenger vehicles retailed in India in FY22, EVs constituted just 17,802 units or 0.65%. However, this represents a 257% jump over FY21.
Yes, you have a certain brand which is dominating because of their price points and everything. But I think in terms of BYD as a company, as you know, we are a global company. Our technologies are completely different. We have our own technologies, whether it is the blade battery, whether it is our motors, everything we produce in-house. So we have a great advantage of integrating the e-platform as well as the batteries, the motors, the conductors, everything we are able to do it. Currently, yes, we will only introduce the premium, top of the line premium SUV products, and we will compete in a very, very different segment. When the volumes start growing, when we have, volumes happening, when the demand gets going and BYD gets established, then we'll look at exploring local manufacturing facilities in the long term. So by 2030, we are looking at least 40% of the total EV market. That's our plan.
India is among a handful of countries that support the global EV 30 at 30 campaign, which aims to have at least 30% of new vehicle sales be electric by 2030. BYD's entry is a sign of the growing interest of global car makers to gain a foothold in India's EV market. After launching Kona EV in 2019 to test the market, Hyundai India is getting ready to launch its first electric crossover, Ioniq 5, this year. The South Korean firm has also started developing a small electric car for India as part of its plan to launch 6 EVs in India by 2028. Hyundai's sister company Kia launched its first electric car in India, the premium crossover EV6, recently. Sweden's Volvo debuted its electric compact SUV XC40 Recharge in India in July. Tata's electric SUV Curvv will hit the market within the next 2 years, while MG Motor will launch an affordable mass market EV next year. Volkswagen is also looking to sell its first electric car, the ID.4 SUV, in India in limited quantities next year. Mahindra & Mahindra will launch 5 electric SUVs for both domestic and international markets starting in 2024. Tata Motors plans to launch the Avinya, its pure electric car, in 2025. Luxury car firms are not holding back either. Mercedes-Benz will become the first company to assemble a luxury EV in India as it launches 3 electric cars this year. Audi India's launched its maiden EV offering e-tron last year. In a span of 6 months, BMW launched 3 electric models in India, the iX SUV, Mini hatchback and i4 sedan. Porsche has brought its all-electric Taycan and Jaguar its I-Pace. American EV startup Fisker is aiming to launch 2 EVs in India. Experts say the pace of electrification in the luxury segment is expected to be much faster than the mass car segment.
The EV market is growing. It is expected to grow faster. I think if you see compared to last year and this year, it has picked up in a big way. Possibly we are looking at 45 to 50,000 numbers calendar year 2022. So, because we have already done 25-26,000 for this year, industry as a whole. I think the other challenge is the charging infrastructure. So by I think 2025-26, the charging infrastructure would have also been stabilized to a large extent. Even in other markets or China, for example, the initial 1.5 to 2% adaptability is what takes time, 3 years, 5 years. But after that, the adoption is very fast. So after 2, 5, 10, then the adoption becomes very fast. And plus, I think by that time, even the second-hand market will start coming. But now it is too early for a resale for the residual value of an EV because it's very nascent. Maybe after 3-4 years, people will start getting a value also.
At the current pace, EVs could make up as much as 1.4% of total domestic passenger vehicle sales this year, signaling an increase in adoption. With more than a dozen OEMs vying for India's EV passenger vehicle market, first movers like Tata Motors and MG Motors are set to face some serious competition. Although several of them are still laying the groundwork, Indians will see a wide range of EVs across price points 2 to 3 years down the line. Car manufacturers are hoping that by then the Indian EV passenger vehicle market will have come of age.
Hindi cinema too seems to have run into rough weather, just like SpiceJet. PVR and Inox Leisure are bearing the brunt of Bollywood's failure at the box office. The poor performance of Lal Singh Chadda and Shamshera have forced investors to dump multiplex stocks amid fears of subpar earnings. Going forward, analysts see a rocky road for related players as lack of good content and the rise of OTT platforms keeps moviegoers away from theatres. Here's the report.
The jaw-dropping success of movies such as KGF Chapter 2 and RRR had lifted spirits of multiplex owners who were looking to shake off the pandemic blues after 2 long years. However, latest regional movies including Liger have failed to cheer the box office. Besides, Bollywood movies such as Lal Singh Chaddha, Shamshera and Dobara 2 have faced public backlash. All of this, analysts say, will lead to a bumpy road for listed players like PVR and Inox Leisure.
Regional movies have had a good run in the last year, select regional movies, but not all. So we need some RRR or various other movies which have done well. Something similar to that, we need such movies. But to that extent, I think to expect that we will have as many regional good movies to fill in the gap may be a little too optimistic.
Shares of PVR and Inox Leisure have slumped around 14% each over the past 1 month as revenue from Bollywood movies account for 40 to 45% each for both these players. In comparison, the BSE Sensex was unchanged during the period. Financially, PVR reported highest ever revenue and net profit of 1,000.4 crore rupees and 68.3 crore rupees respectively in the June quarter of FY23. Inox meanwhile reported record revenue of 589 crore rupees and profit of 74 crore rupees. However, this was largely driven by higher food and beverages revenue, lower employee costs and higher other income. Further, net box office collection as a percentage of revenue improved only 2 percentage points for both PVR and Inox Leisure. Moreover, Inox Leisure clocked a mere 6% increase in footfalls above the pre-pandemic levels, while PVR is yet to recover the lost ground.
Today, there is a massive structural change which all of us know thanks to corona pandemic. The OTT platform has really grown quite big. This is going to eat into the market of movie hall. But today, the OTT platforms have taken some market share. We, particularly in the low end, mid-sized budget movie segment, they have become almost monopoly. I mean, not monopoly. Even 2/3 of the movies are coming directly debuting on OTT. And even if they come on theater, they run only for 3 days, 4 days, or maximum a week. People expect them to come on OTT and wait. So both ways, the movie halls are affected very badly.
Against this backdrop, analysts see another 10 to 15% correction in stock prices. They also expect weak earnings to put pressure on price-to-earnings valuation multiples. On Friday, stock-specific action and auto sales data will guide investors. Globally, market participants will await the US jobs data.
Supply chain disruptions, soaring crude oil prices, shooting inflation, and resultant market uncertainty had forced global investors to rush for safe haven currency, the US dollar. It is also called the world's reserve currency. But what exactly is reserve currency? Watch our next report to know more.
Is the world order shifting towards multiple currency systems? The murmurs of finding an alternative mode of payment recently grew louder after Western nations, led by the US, slapped a host of sanctions on Russia for attacking Ukraine. Iran too had been trying to find an alternative to the US dollar, the world's reserve currency, to circumvent the sanctions imposed on it for its nuclear program. Back home in India, the takers for UPI are growing. France, UAE, Singapore, Nepal and Bhutan are on board UPI now, and it is fueling India's ambition to put rupee on the world map by making it a reserve currency. But what is a reserve currency? A reserve currency is typically a globally recognized foreign currency that central banks or other financial institutions hold in large quantities as part of their country's foreign exchange reserves. It is utilized for global transactions involving trade and investments. At present, the US dollar is the world's predominant reserve currency. A reserve currency is also used by central banks to prepare for international debt obligations and to influence their domestic exchange rate. A large proportion of commodities from gold to oil are priced in the reserve currency. Thus, other countries have to hold this currency to pay for these commodities. There is one more reason for holding a reserve currency. Doing so minimizes exchange rate risk since the purchasing country will not need to exchange its currency for the reserve currency while making purchases. Besides import payments and servicing foreign debt, countries also maintain such reserves to overcome economic crises. Let's say a country sees its currency value fall during a recession. Then its central bank can use its foreign reserves to maintain the currency value. A reserve currency's main feature is that it must be easily convertible and have a stable value. The factors that determine the usage of a country's currency as a reserve currency are the size and heft of its economy, particularly the importance of the economy in global trade, the openness and depth of the concerned country's financial markets, and its macroeconomic policies. Since 1944, the US dollar has been the world's primary reserve currency, which is why other countries closely monitor US monetary policy to make sure that the value of their reserves do not face any negative impact due to inflation or rising prices. Over the years, the IMF has selected other reserve currencies, which are the euro, Chinese renminbi, Japanese yen, pound sterling, Australian dollars, Canadian dollars, and Swiss francs. There has been speculation that the Chinese renminbi will displace the US dollar as the world's reserve currency in the coming years. It is also believed that the dollar will have to share its influence with other currencies going forward. As far as the rupee is concerned, meeting the ambition of becoming a reserve currency requires full capital account convertibility as suggested by the Tarapur Committee in 1997.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The 5 countries of BRICS are also reportedly moving ahead to create an international reserve currency. That's all for today. Catch the next episode of The Morning Show on Monday. Bye-bye for now.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.